Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. Today I want to talk about the I word, and the I word is inflation. This is something we keep expecting to happen, but it hadn't happened yet. Obviously, we know it takes time for an economy to recover, but right now, in 2014, we are back to employment levels that we had before the meltdown. In other words, the amount of people working today is the same amount of people that were working in 2006. So in that respect, the economy has recovered tremendously well. And in Oklahoma, for instance, in fact, in Oklahoma City, we're only at 3.8% unemployment rate. So unemployment rates are now down nationally to about 6%. And the possibility is that they will go lower. And houses are selling. The economy is robust. The stock market is way up. Yet the inflation is not there. Now, part of this, as I've said before, is the Federal Reserve. The Federal Reserve has been doing quantitative easing, which means they're buying a lot of Treasury notes, they're buying a lot of mortgage-backed securities, and they're keeping the interest rates low. But since the first of the year, they've been tapering off $10 billion worth of purchases every month. That's how much less that they're buying at this time. By the end of the year, the Federal Reserve will not be doing any kind of quantitative easing. We will be back to a normal private market, buying U.S. Treasuries, buying mortgage-backed securities. So we can expect inflation to go up. Now, right now, it's targeted about 2%, and that's not a whole lot. I mean, I go back to the days when we had tremendous amounts of inflation. But expect these inflation rates to rise. Now, here's the good news. The good news is that for whatever reason we want to put on it, politics, worldwide economy, whatever it happens to be, that our economy is gradually picking up. It's not heating up in any particular way. And that's really when inflation rises. So right now, it is still very, very low. Now, by the end of this year, or by the first quarter of 2015, we expect it to go up. We expect it to go up about 1%. Maybe, if things really get rocking, about 3.5%. That is still incredibly low inflation rates. So when it comes to U.S. housing, we're still in tremendously good shape. In other words, even if we go to 5.5% 30-year fixed loans, that's exceptional. That is unbelievable. If we have a 3.5% inflation rate and you're borrowing at 5.5%, that means effectively you're borrowing at 2%. That's the real money that you're borrowing at. And so you should still be buying houses. Now, eventually, it is going to affect things. It will affect interest rates, but it also will affect appreciation. Because in the past time, if inflation gets to about 5 or 6%, we've seen housing going up quite a bit. But right now, it's still an excellent time to buy. It should be an excellent time to buy all through the end of this year. But eventually, inflation is going to be something that affects us. We're going to really be giving a hard look at this in 2015. I think that we're in for more inflation. But the good news is, unless something incredible happens to the economy to make it boom, then it still will be relatively low. Still a good time to buy. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.